of a sudden we had the breakthrough, and now we're having some additional breakthroughs, what we call metacognition. And so it's the most profound advance in technology ever.
24% are worried that artificial intelligence will make their job obsolete.
What can companies do to lessen employee fears when it comes to the worrying? It's like, don't worry about it. You're going to be... They should be worried, should they?
Technically, we are in correction, and technically, the bull market that ostensibly began back in late October of 2022, more than 70% run-up in the S&P 500, that bull market is over.
And the tech-heavy NASDAQ was hit even harder. It was the worst day for NASDAQ since 2022, falling almost 9,000 points, or about 4.7% after entering a correction last week. We know Tesla shares plummeted, so did Alphabet, Apple, Nvidia.
I'm actually relatively or really optimistic on the private markets, private equity, all the way down through like real estate private equity, venture capital included. I think the number was maybe it's even close to $2 trillion of pent up dry powder of capital on the sidelines that is looking to get deployed relatively soon. But there is going to be an impact with what's happening. Job losses, less money going back into the economy through those different variables. But the money is still there, and it's going to get reappropriated somewhere else. AI and how that's impacting the market. And it has been for quite some time, because there's certain switches that are programmed into these algorithms, they're just going to sell.
And welcome back to another episode of the 100-Year Podcast. My name is Adario Strange, and this week we have with us someone from the venture capital investing world, a world we often refer to in this show, but we don't often get the opportunity to speak to someone from the inside. Jeffrey Fidelman, how are you?
I'm doing well. Thank you. Thank you for having me.
Thank you for joining us. So particularly thank you. I know like you're in the venture space and you're not necessarily kind of like a Wall Street trader or anything, but we're kind of in this market tumult period right now where there's blood on the streets. Everything from crypto to blue chip stocks are down. Some are saying it's because of various policies. Some are just saying, this was this was coming down the pike. This was kind of inevitable. A lot of people have been waiting for this kind of thing. I want to get into all of that, and I want to talk about we're kind of in a period where there are these massive AI investments. Like we have like a string of them, like in rapid succession. Yep. So I want to get into all of that. But first, tell us like a little bit about yourself. Like, what do you do? What have you been up to? Like, just give us a sense, give us an outline of where you're from.
Sure. And I want to touch on the AI as well as the market trading as well, because despite that's not what I do today, I'll go over my background. One of my first jobs was actually as a portfolio manager at Morgan Stanley. So by way of background, maybe a little bit more traditional. I graduated Harvard. I spent the better part of a decade in banking. Half of that was as a portfolio manager at Morgan Stanley, and the other half I spent at HSBC. And when I was there, I was recruited by a family office to help them set up a venture capital fund. The investment space was early stage tech and tech-enabled investments. I helped them send it up, deploy the capital, and then in 2015, recognized that there was a big gap between really what traditional investment banking looks like and does, and then the entire early stage market. So in 2015, started what is now an investment bank. We have about 40 people with us now, all remote, US and Canadian based. And what we do is help companies put together all of their fundraising materials and then actually help them go to market and raise that capital. And we do that in a little bit of an atypical way, as I said before, where it's not based on my Rolodex or any one of our analysts, but rather a process that we put into place. We've built a CRM over the past 10 years that is fed by PitchBook and Preqin, Fintrix, and all of the other usual characters, and create these outbound investor relation campaigns for our clients that then our analysts will pick up the phone, will email investors on behalf of our clients, so that from the investor's perspective, it's the company that's reaching out to them directly. So that's super broad strokes what I do. A lot of our clients are going to be C to Series B, so raising anywhere from a few $1 million upwards of $20 to $30 million. And industry-wise is really across the board. Many will be tech or tech-enabled. And A lot will be consumer goods, skincare, nut milk blender, all the way to large infrastructure projects.
And I understand that, just investigating your background, you've kind of like begun to focus on AI, at least in terms of your personal focus. Kind of has that intersected with some of your larger investment projects, or like how are you actually touching the AI space beyond analysis, I guess?
So AI, I maybe like many other people do that have a close relationship with AI, it's a relationship of both love and hate. Um, I can tell you that from just a third party perspective, there is a lot of money going into AI, whether it is innovative AI, whether it is layered AI, meaning I'm just building a wrapper on top of an existing AI, or the actual infrastructure to support the growth of AI. And I think that similarly to the internet, I feel the same way about Web3, despite its not as ubiquitous as maybe we all thought it was going to be. And Web3, again, not crypto specifically, but just Web3 blockchain as a whole. I think AI and I echo what many people have already said, that AI is really going to usher in the next phase of innovation, of internet, of just the way that we operate our lives, let alone do business. And anecdotally, on one hand, given what we do, we try to layer in AI. We've built our own kind of proprietary methodologies to leapfrog research efforts and personalizations. And I can talk about that story as well, but we ended up cutting and ripping that out entirely of the business because it lost efficiency for us. Whereas other bits and pieces like mass content writing and being able to look at whether it's trades and digesting vast amounts of data, whether it's looking at SEO or content marketing and how to best optimize, in my opinion and what I've seen, that's really where AI has had the most meaningful impact, at least across what we do and our clients as well.
Yeah, I'm curious. We had one of the vice presidents from Sandbox AQ on a few episodes ago, and he was talking about this intersection of quantum computing and AI as one of the ways to, I guess, analyze the market, kind of make predictions, kind of, almost, I don't know if replace is the right word, but super augment people, in your position. Are you aware of kind of like some of these efforts to kind of use AI and I guess also quantum computing to kind of supercharge what you're doing? And do you think do you think it's worthwhile? I mean, how do you view it? Are you kind of supportive, or do you kind of think it's maybe I don't
It,
know.
look, it depends, right? Like, is fire good or is fire bad? Well, it can be good.
Exactly.
You can cook, or it can burn your house down, and then it's bad, right? And it's the same type of question, because the reality is that, am I personally afraid? At first, when I saw AI creating pitch decks and AI creating financial models, of course, like, I'm looking at it thinking, do I need to get ahead of the curve? Is this going to cut my feet out from right under me? But the reality is that you still need a person that has some level of experience. Maybe AI will get there eventually. In working with people, to put together their decks, how are you actually going to present this to an investor? And that was the same exact problem that we found we had when you ask AI to provide you something, but that something that you have been provided needs to actually be manipulated, be used, be implemented in some way, shape, or form by a person. That's where breakdown starts to happen. Because the person, maybe even asking the right question, has received this product and is now using this product without having any idea about what that product is or any experience with the creation of that product. So for us, it was personalization and reaching out to investors. Great. AI did a great job for us. We were hyper augmenting. Let's say for 100 leads, we were getting 1,000 out of it. Same quality. But the problem was our analysts starting reaching out to these investors had absolutely no idea why they were reaching out above and beyond that one line of personalization that AI had provided. So I think AI can augment a lot, but there still needs to be, whether it's a human layer, a management layer, a QA, QC layer that sits on top of the product of AI to actually make sure that is being implemented in the correct way.
See, I love that answer. I mean, you're speaking about it from, I guess, a top, a higher level in terms of management and analysis and investing. But yeah, I'm personally a little frustrated that so many companies are just throwing AI at a bunch of problems that still require a human touch. Like for instance, a lot of these call centers, when you do call something like your bank, you know, sure, these AI agents can help, but often there are nuances, that we need to kind of investigate, and a human, perhaps augmented with AI, would be a better fit. So I love that answer. Before we get into some of these investing stories I wanted to touch on, just give me kind of I don't know, your broad stroke view of what's happening right now. Right now we're kind of where are we? We're in March, and right now we are in a stock market bloodbath, a crypto bloodbath. Have you identified kind of reasons as to why the market is in its current state? Did you predict this? How are you, I guess, moving, in the market? Do you think this is a blip, or do you think we're about to enter
I'm actually relatively or really optimistic on the private markets, private equity, all the way down through like real estate, private equity, venture capital included. Very, very bullish. And without giving you an entire dissertation, from an economic cycling perspective, the past 7-8 years have been unique into itself. And what I mean by that is just pre-COVID, 2018, 2019, we already started seeing a huge amount of capital going into private markets, private equity funds, venture capital companies, or private equity companies. We all have seen what happened in 2020, 2021. Interest rates came down, a lot of free money, a lot of money went into investments as well. And what a lot of these funds have, if not all of them, have typically 5-year deployment windows. And what we saw with the lack of deployment of capital over the past 3 years, now there is such a pent-up demand. Number one, from the IPO markets, with companies that were supposed to go IPO last year, the year before, they were supposed to go this year. And now the IPO markets seem to be a bit shaky again because of the past week in market performance. But you still have a ton of those companies that are waiting for their liquidity event. You have a number of private equity funds that are sitting on cash, whose LPs are now also getting very frustrated for 2 reasons. Number one, they're making better money and were making better money in the market the past 2 years than private equity or a lot of venture funds were returning. And because that's committed capital, they're basically sitting on their hands. Managers are collecting fees. Meanwhile, private investors are performing better in a public market in an ETF or a basket of stocks. So you have LPs also putting pressure on fund managers to deploy that capital, otherwise return it back to them. So I think the number was maybe it's even close to $2 trillion of pent up dry powder of capital on the sidelines that is looking to get deployed relatively soon. And we're entering a market now where politically, one way or another, typically seems to be more laissez-faire or hands-off, even now with everything going on and through the government cuts. But there is going to be an impact with what's happening. Government cuts, job losses, less money going back into the economy through those different variables. But the money is still there, and it's going to get reappropriated somewhere else. So I think it is more of a blip than anything else in terms of where we are now with the market and the reset. And I think something you said very early on is AI and how that's impacting the markets. And it has been for quite some time. Quant traders or algorithmic traders or hedge funds have been around for a while. And usually when you have certain percentage moves, regardless of geopolitical climate, regardless of what's playing on MSNBC or Fox or CNN, because there's certain switches that are programmed into these algorithms, they're just going to sell once something breaks the 200-day moving average or breaks another technical type of indicator. Funds will just sell or buy derivatives depending on what the algorithms state. So I think it's a compounding of events between tariffs, companies being affected by those tariffs, especially earnings, if you're importing raw goods from China or anywhere else. I think the actual geopolitical environment with everything going on now as well. The algorithmic traders kind of hitting those switches, and the promise of interest rates continuing to decline is forcing investors to just sit and wait patiently because they can. So that's, without giving a dissertation, kind of broad strokes, my thoughts on that.
I remember, well, first of all, I just want to say, I don't have a Bloomberg box or a Bloomberg terminal, but I do keep CNBC on in the background on most days. And I remember back in 2019 into 2020, before, the big shutdown, there was all this talk of recession, recession, recession. And I've just kind of paid attention. I never paid attention in my life as closely as I have in the last 5 years as to when people talk about recession and how they speak about it. We've had recessions before, but what I'm wondering is, when I used to speak to my grandmother, she came from the Depression era, and she told me stories of, the stock market, and she actually went on to work for the Federal Reserve. And so she would tell me all these stories about, how people lived and shopping and everything. Then I go to the store, and I'm looking at, $12, eggs, for a dozen, and I'm looking at $7 sandwiches, and it's not a gourmet sandwich, it's just like a regular sandwich.
Probably an
Someone,
egg sandwich now.
yeah, it's really a cheap sandwich, and it's like really high price. So I'm just curious, like from your vantage point, um, is it possible that we would ever have like a depression? Do you think that's something that is kind of like a almost on its own a black swan event, or do you think that's something that could ever really happen again?
Yes, never say never. If it is a possibility, there's a probability of it happening. So it's not an impossibility. Of course, it's possible to have another depression here. What it would take to actually sink into something like that, I don't know. I don't know. And I think now with a lot of robotics and information technology, just generally entering a digital age, falling to that becomes harder because of what the US is doing around innovation and advancement. I think that really, if US were to fall behind significantly across the board on all events, including as a superpower, that's likely when it happens again. And if we look at 1929, it's the lead up between the two wars. So there was a depression. There was a glut of children being born. There was no workforce. There was no production coming out of this country. And I think now, despite having been through several wartime periods, and some will say we're still in one, there doesn't necessarily seem to be this like glut of birth rates or innovation or capitalization that's around the country.
I think I've studied the Depression a bit, and the Great Depression, as it's called, and yeah, everything you said, those are things I see, I read about, and I look at kind of where we're going now, and I look at there's a meme that I saw on X the other day, and I think it was something like it has like the four panels, and on the two top panels it was like the year 2019, and the first panel is the guy saying, oh, I'm out of work, I need money. And then the guy saying, there's this guy with like, a bro hairstyle, flipped up, he's all whatever cool. And he's saying, learn the code, bro. That's when all these mass layoffs were happening in 2018, 2019, it was like, learn the code, learn the code. And then the bottom two panels, as you might guess, is that same bro is now, he's like withered, his hair's messed up, and he's saying, oh, AI is taking all my coding jobs. And the final panel says, learn to weld, bro, meaning welding iron.
Yeah.
And so, we're still not really at the point where robots, physical robots are out there in the marketplace, doing plumbing jobs and, policing and all that kind of thing. But we know it's coming somewhere down the line. But it does seem like that's one of the few firewalls or routes, alternative routes that humans can take as, I guess, knowledge work begins to be, I guess, to some degree at least, supplanted by AI. I'm just wondering, like, from your vantage point, are you kind of like from the doom camp? Are you the optimist camp? Are you somewhere in the middle? How do you see the future of human work? Particularly white collar work, knowledge work, with the advent of so many different AI solutions, particularly AI agents.
The reality is, in my reality or my perspective is I'm in both camps or maybe in the middle. I'm not in the middle. It's one or the other, good or bad, and probably a mixture of both. And I say that because everything that we spoke about and the benefit of having a human augmented with AI, that slowly starts to go away because that human experience is slowly starting to go away. And I very much understand why, people like Jamie Dimon are demanding return to office. I can tell you that Morgan Stanley was one of my first probably my first like professional job experience. Before that, I mean, worked at a pizzeria as a gym trainer, as all these different things. And I walk into Morgan Stanley, right? And English is my first language. I was born in this country, and that's how I grew up. I can tell you that everyone was speaking a different language. And only through like immersion therapy or immersion there in those languages and speaking with people and water cooler talk and sitting with somebody and having lunch and picking their brain and knocking on someone's door and holidays, giving somebody a bottle of vodka and asking them to sit down for 20 minutes. Like, you can't do that remotely. I mean, you can, but it's easier to say, no, I don't have time for this and go away. And I run a remote firm that is fully remote. We do team offsites twice a year, but there's definitely a benefit from being in office, especially early in your career, so that you can frankly figure out what you don't want to do and what you do want to do. And between that having kind of gone away for the most part, especially younger and younger generation is looking for more hybrid, looking for more of a lifestyle type of work. And now with a lot of this AI being able to augment mid-managers, I think it was Zuckerberg that was saying, or a lot of them are getting laid off from Facebook, or what you were just saying in terms of whether it's white collar and how those things are appropriated. I think what we'll probably end up seeing over the course of, let's say, the next generation or two, is that people will end up working longer, not even because they have to, because there's going to be a gap of information in a generation where I can use an AI tool to help me build a PowerPoint and then position that with a client because I've done it so long, so many different times, or build a model from scratch and know what questions to ask to spark an intellectual debate around how a business model should be formed. But if I'm just receiving information from someone and either inputting it or ultimately that person is inputting it into an AI tool that just spits them out a deck, the gap still exists of, I know my business. I just told you AI, put a deck together for me, and then it sent me the deck. Now I have a deck, I have my narrative, and there still needs to be an element of overlap or revision before I can actually have those two connected. And that goes the same with everything, with modeling, with personalizations. Perhaps I'll get there eventually, but we're not, with everything I've seen so far, we're not there yet.
Okay, so you see that we have at least, I don't know, let's say a couple decades at least minimum of where we definitely will be working in tandem with AI as opposed to this wholesale removal of humans from white collar work.
And
Okay.
people are trying now. There's plenty of like AI agents out there, SDRs. I recently did a demo of a product where it records a video of me for a minute or two saying like random lines. And then all of a sudden you put a script in and it'll show me, Jeffrey, sitting here in my clothing, speaking the script that I just typed in and speaking with my voice. It's moving, like my whatever wrinkles or whatever are moving along with my face. And it looks legit. So I think if anything, the next strand of innovation is going to be this spoof checker, right? Like I want to know, am I speaking with a human being or an AI agent, whether it's on a phone call or video call or otherwise?
So I love remote work. However, I am beginning to wonder if we will kind of, it seems like what you're kind of moving toward, this idea where we need a proof of life, a proof of sentience, a proof of, are you a real person? And because the tools are becoming so sophisticated, I don't know that we'll always be able to do that via screen or phone call. Some of that will just, even if it's maybe we get into a habit of, okay, we have to meet in person at least once. Maybe that becomes the bar, just one in-person meeting. And then, okay, now we can go virtual. People think that kind of knowledge work will kind of, I don't know, somehow wither away. But, I heard Sam Altman, the CEO of OpenAI, the other day talk about a new product that they're releasing that is like a superb writer. Yeah, just a superb at writing. And I, was looking through the comments of his post, his X post. And one person said something that I thought was really, that I agreed with, which is basically people want to read the thoughts of other humans. If they know that it's coming from a machine, they're less interested. Now that may change over time. Maybe in a few decades we won't care. Maybe in 5 years we won't care. But right now, I can tell you, and this is coming from someone who I use AI tools. I have no, I'm not particularly negatively disposed toward AI. I can tell you, if I know that something's written by AI, I beyond analyzing it for kind of like what the talent level is and like how it reads, I'm much less interested. I want to read the thoughts of another human who has had real life experiences. Again, that may change for me as well, but that's where I'm at right now.
No, it's a really good point, and let me weave this thread for you, especially given the fact that you mentioned studying the Great Depression, and how all that worked. If you think back to no, neither of us were alive. I don't want to date you, but I'm going to say neither of us were alive back then.
Vampire, no.
Right, yeah, right. When you think about Great Depression, let's think about clothing for a moment. You think back to a video reel that I've seen, like New York City, San Francisco, 1920s, 1930s. Every man is in a suit. Every man is in a custom-made suit. Now, I'm sure those custom-made suits were not thousands of dollars, but they were all bespoke, custom, however you want to label it. They were all custom made to measure suits for the men that were wearing them in all of those videos. And then you had the Industrial Revolution come out, and you had machines create all of these suits, all of this output that goes. And now everyone's buying off the rack and starting to tailor it inside of wherever you're buying, Bloomingdale's, Macy's, Lord & Taylor, wherever. And then a number of years ago, when like I think my suit was one of the first ones, and then a few others started coming out. Now you can order to Vietnam to get suits done, or to China or Asia or anywhere else. Now all of a sudden, it's more affordable and more ubiquitous to have a custom-made suit again. And I say that in terms of advent of both technology and adoption, where we're at a point of technology now that innovation has come far enough where we don't need mass applications of innovation. We actually need individualistic applications of innovation. And now when you think about technology as a whole, we're just now, like AI was created out of a necessity. And it was created, and so is quantum computing. And I'll tell you why. Because over time, as we've had more and more technology touch our lives on a daily basis, there has been an incredible amount of data that is getting collected every single moment of every day, on every individual, on every building, on every AC unit, on every airplane, car, on everything, right? Like I wear an Aura ring. This has 15 different points of data, probably every minute of every day. Now, it's great, right? All this data around us, we're collecting it. I think driverless cars, it's like 40 terabytes of data in a driver in a day or something like that. Planes are even more than that. Most of this data cannot be digested or ingested. There's nothing you can do with it. It exists. There's ones and zeros out there, plentiful, but there's absolutely no possible way of ingesting this data, or hasn't been. So AI, like LLM, and really what AI is taking a whole bunch of information, digesting it, and then creating some sort of assumptions based on the information already digested. So quantum computing really is the necessity of, we have too much data to ingest and process fast enough for the software that we've created, this AI, to actually give a holistic opinion or view or analysis on all of the data. So what we'll see a lot more of is collection points. Think about it almost like an oil line, right? Collection points of data, transmission of that data into the digestive tract of data, and then the software, the AI, that's actually taking in that data and digesting and putting an output because of that data. So if anything, we're going to see a huge amount of increase. Like look at data centers, look at quantum computing, look at light data transfer technology, like free space optical types of technology. All of that is going to continue to grow. And this is all within physics, within quantum computing. All of that is going to grow at an incredible rate because data is not slowing down. Like that TAM, SAM, SOM is growing exponentially daily. AI is going to continue getting better at digesting data, but we need to make it powerful enough to actually consume all the data that we have available and give it.
Do you know, I usually save this question kind of for the end, but I want to ask right now, if I had a child, well, let's say last month, and I was mapping out their future, whether, university, private school. I remember like the big boom 10 years ago was like, getting your kid to learn Mandarin. 20 years ago, it was getting your kid to learn Japanese. And now it's like, now the thing is like, well, don't send your kid to college, for, liberal arts. Send them to school for, at minimum business administration, but, ideally, computer science.
Mhm.
But now that we have all of these, models engaging in software development, and you even have, like you mentioned Zuckerberg, and there, I think the CEO of Salesforce also made a similar statement talking about, kind of using AI for software development. What would you tell someone, who just had a kid, like how do they direct their child for the next 20 years? Like, what's the plan? What's the roadmap?
Look, I have two of my own, very young, and I can tell you that the plan is usually try not to get sick after holidays or seasons or stuff like that, which is I think any parent with young kids would say the same. Um, in terms of education, look, I don't know, and I'm literally like I didn't just have a child, but they're less than 10 years old, both of them. And while I think about this often, I'm not necessarily making any forward movement or motions in either of them, like for something specific. Do I think I think STEM is incredibly important. Um, I look back on when I went to school, and I don't know if anybody else who's listening is going to remember this, but cursive was like a 3-hour thing in our class. And we were told that if you can't write in script, you will fail at life. Just stop here in second
Yeah.
grade and don't go on. Right. And we also had wood shop and like home economics where we would do
Right.
sewing and baking. And apparently that stuff doesn't exist anymore. But what
Right.
does is computer science and coding and moving like the turtle around and creating those codes. And I think it's incredibly important. It's important to be able to use the tools that are around us. And if you look at college, like primary school education, I think there's a lot that can be done to enhance it and really prepare individuals at the end of grade 12 to actually go into life. College has become this necessity that it never should have been, right? Like Ivy League colleges were meant for wealthy families whose children wanted to go into philosophy, right? That's like what college was for originally. And what I think it's turned into, unfortunately, and what maybe it should have, and a lot of other, like Germany, for example, has a grade 13 where it's effectively a trade school or like an internship grade. I'm a big believer in that. Not because you have to choose something in grade 12, but at least get the experience of like go for many internships or have a trade program or figure out like people should graduate high school knowing how to write a check. Although checks probably now no longer are a thing, but like at least balance their bank accounts, understand interest rates. How do credit cards impact them? Should I use Affirm or Klarna, or should I get an Amex or charge card and something in between? So I think fundamentally, regardless of where we go with technology, AI or otherwise, there are some core skills that people should know graduating from primary school, let alone like secondary colleges. But with that being said, in order to like acclimate to some sort of professional environment, yeah, STEM exposure is going to be important. And it's going back to what I said before. AI, I don't think AI replaces people. And if it does at that point, then what Musk was saying or whoever about universal basic income becomes a reality.
Yeah, just but let me pin you down a bit. So let's just say I don't want to work a farm. I don't want to go into agriculture. Let's say I don't want to be a fashion designer. Let's say I want to be a business person who works in tech. Do you think that it might be enough to simply intern uh, at a few, successful companies, learn my craft, maybe work with AI to kind of learn to code and that kind of thing, and then maybe embark upon my own venture? Or do you think that the college yeah, by the way, I've mentioned this before. There's an article from The Atlantic by David Brooks that specifically talks about what you just mentioned, which is the antiquated um, Ivy League system, or let's just say academia in general, that was meant for one thing, and has become something else, and is now kind of viewed as this kind of like prerequisite to getting a decent job, where that was never necessarily, in the beginning, that wasn't necessarily, the goal. Um, so, I mean, would it be enough to just be an intern and learn on your own, or do you still think there is significant reason to go into $100,000 debt, for a 4-year degree? Let's say business administration.
Look, it depends, right? It depends on the person. There are some people that, and we hear about them all the time, that drop out of college, that never go to college and end up building $1 billion plus business unicorns or otherwise. There are others that go through PhD programs all the way through and don't necessarily make a business. I don't think the amount of money somebody makes is a derivation of their success or the quality of a person. Like, if somebody doesn't make money, it doesn't mean they're stupid, doesn't mean they're a bad person, doesn't mean anything other than that's either not their interest or it just didn't work out for them. I think, on one hand, educational public school system was created by industrialists at the turn of the Industrial Revolution so that they can basically educate a bunch of factory workers. Sit in your chair, raise your hand, come up to the desk, drop your test off, memorize these like 14 points that you will never have to remember again in your entire life. Like, it's an industrialist type of educational system. But at the same time, there's a huge social aspect to it. And now I'm talking about both primary and secondary, right? Like, the friends you make in high school or the social ability you have in high school and elementary school, middle school, form who you are and how you are as a person. And then in college, depending on which college you go to, going to an Ivy, yes, of course, it's about the education, but it's also about the connectivity you make in the people who you go to school with. So it also depends on the person, right? Like, a lot of people are very malleable, and I hear similar stories all the time that their kids go to college in September, come back for winter break, and it's like a totally different philosophy of this person that's come back. Good, bad, or otherwise, just different. So, on one hand, I think a lot of people are seeking that social connection and end up doing exactly what we started this podcast around, which is following one another. Maybe with trades, maybe somebody sees Tesla going down 5%. They don't want to catch a falling knife. They trade out of it too. 8%. Now another group of people would drop. 10%. A next group of people drop out. And it's just kind of this like following group mentality. But is it worth paying, $100K a year or for a semester now, whatever it is, to a school? I still say it depends. Right? Like, if you go to the right school and make the right contacts, learn, absorb as much as you can, and utilize that, not just to party and drink and hook up, but like actually not only benefit you in that moment, but benefit you 5 years from that moment as well. If you can achieve both, then yeah, it's probably worth it. But paying it to go to, a school just to get a degree, just to come out and show employers that I have a bachelor's degree to get a job, probably not the right way to think about it.
Yeah, and I guess that's why companies like Google in the last few years kind of made a statement. They were very public about saying that we no longer require you to have a college degree to come work for us, because they know that so many brilliant people, Zuckerberg, we keep mentioning him, he's a famous Harvard dropout. Bill Gates, famous Harvard dropout. So many brilliant people do attend college. It's almost like, it makes me think about the NBA. I don't know if you're a sports guy, but like, just if you can get into the school, based on your talent and having at least a minimum GPA, that's kind of like, okay, that's all they want to know. At least at a certain point. Now they kind of don't even need the college thing, but at a certain point, they just wanted to know that you could get in to that school with your talent and some baseline aptitude. And then, okay, yeah, we'll draft you. You only had to do 1 year at college. And that seems to be
right. Like, a 4-year school should make you well-rounded. But when you're looking for an employee to hire, like, yeah, you want someone who's relatively well-rounded, but you want somebody that has like a focus on something. If someone's really, really good at something, I don't care how much you know about history or about, like, I want you to know, and I believe that people can grow as individuals when they want to, but that's not what's important to a business. What's important to a business is there value from the person I'm paying? I'm paying this person to do something. I want them to be a good person and a good citizen of the company. But at the end of the day, like, they need to perform. If they're not performing and a good citizen of the company, then thank you. But I can say it from my perspective, running a relatively small business, I wouldn't be able to afford that. Google maybe is a different story, but the whole point is that, you know, people have skills. They should, back to your point, should hone in on their skills. And, you know, I know a lot of people, a lot of consultants will say, you know, and I used to say this all the time, I'm an inch deep and a mile wide versus the other way around. But I think that depending on what that is, it's better to be focused on something and be able to come to someone and say, this is what I'm good at. I don't do anything else. If you need help with this, I can help you. Anything else, like, thank you for your time, and I'm not going to be helpful there, and go on to the next one.
Yeah, I want to talk to you just very briefly about kind of center of gravity with regard to talent and investment. Meaning, often people look at Silicon Valley and they talk about people converging on San Francisco and Silicon Valley in general because of, it's just like this is where a lot of software developers go, a lot of motivated people from the US and from abroad. And I was kind of recently just looking, is very casual, so my facts may not be completely correct on this, but I was looking into, why is Seattle this kind of tech hub, you're subordinate to the Silicon Valley, but it's a tech hub, but nevertheless, it has like a fairly radical, social culture, during, the great shutdown, there were like these
Right.
entire blocks, it's just, if you kind of read the news about Seattle, you'll see that it's actually reminiscent of, I guess, 60s San Francisco. I started looking into it, and it turns out that Boeing was kind of one of the seed companies that kind of based themselves there before, the country was fully formed. I think it was the 1800s. I could be wrong on that. But Boeing basically pulled a lot of engineer talent to the area. And then because of that, there was just kind of like over time and other people who were either from there or decided to base themselves there to, mine the talent. And I'm just looking forward now where so many of us are working remotely. So many of us are using AI to augment our skills. And I get the sense, perhaps incorrectly, that maybe that might in some way change this gravity well that certain areas generate. Like, for instance, here in New York, it's been historically known as a media center. A lot of writers and aspiring authors would come here. And now that's kind of, it's changing because the media industry has changed. So I'm just curious, do you get where I'm going, what I'm, reaching toward? And what do you think the future is for that kind of thing in terms of like markets, like a Silicon Valley, Seattle, various, tech hubs?
So I've actually have thought about this, and I don't know whether or not there is a correlation at all to politics, whether conservative, liberal, or anything in between, or on the other side of it. I think more it is failure. And this is more of like a Gladwell type of comparison, but you have these highly densely populated urban areas that have a high rate of failure, right? Like, we always hear about Silicon Valley unicorns and Apple and Facebook or Meta and Google and X and everyone that goes there, and everyone where they came from and why they went there. In Seattle, you have Microsoft, and you said Boeing, and I think Amazon is up there as well. And New York, you have a ton of different companies. Miami was born out of COVID, basically, also, and that's kind of on its own stilts standing right now. But I think it's really failure. You have if you look at any chart, it's basically a pyramid of the success of what a company will typically look like. A whole lot of pre-revenue, pre-seed startups. Some get funded, some fail. That moves them into the next kind of ring or level of the pyramid. And then slowly you continue climbing up, and there just naturally is less and less companies as you climb up the pyramid, because they either fail for funding reasons or fail as a business reason. But you have a high rate of failure. And I think what the US does incredibly well is encouraging failure. We have a lot of risk capital. A lot of VCs lose a lot of money. I mean, lose, it goes back into the economy, but they lose money because they see 1x return or 0x return, or they lose the investment on the companies that they invest in. So failure, in a sense, is highly encouraged. And I think that that is what just this country as a whole is why we'll continue to lead innovation, because we accept failure. Now, failure, again, different people define it differently. I would look at a real failure as if you failed and didn't learn anything, right? Most people would try to learn something, restart, rebuild, revise, reconstruct, relaunch, do whatever they need to do. And I think that San Francisco, Seattle, New York, all these places, all of these hubs, what they consistently encourage is failure, because only through that type of work are you either going to fail or going to succeed. If you have no risk of failure, then it's probably not interesting to investors at that point. It's a lifestyle business.
Interesting. It makes me think about Detroit. They had their big fall off, after their auto industry decline. And, the city became like a bit of a wasteland economically and, in terms of real estate. And now they've had this revival, and there's all this new development in Detroit. And there is some investment coming into Detroit, but I don't get the sense that there's that risk tolerance, that failure tolerance. And it makes me think that exactly what you're saying, that's the secret sauce. Someone needs to go there, or, the officials or whatever, they need to encourage failure and say, it's okay to fail here. And when you fail, we'll catch you and encourage you to try again. And that makes perfect sense. Our time's almost up. So I want to kind of quickly get us to run through the stories that we were supposed to get to at the beginning, but all this has been so interesting. Anthropic, the CEO, Dario Amodei, he recently landed a new round, Series E, $3 billion. I think it's a $60.5 billion valuation. I think one of their investors, Menlo, just a long list of investors. Now, it's interesting that investment, and this is all, speaking to the dry powder that you mentioned earlier, sitting on the sidelines. It's interesting that this is happening, particularly for Anthropic, because I don't know if you followed him in the media in recent months, but he has been kind of hand-wringing, almost doomsayer, talking about AGI, artificial general intelligence, and, kind of like, what are we going to do in the future? How will things, pan out? And yet he is, the recipient of kind of one of the biggest rounds in recent memory for AI. I mean, did you get a chance to check that, I guess, investment out? Any thoughts on that?
Yeah, look, I think that, first of all, a lot of people would be incredibly surprised by the expense of what a data center actually costs. To build a data center that's like a hyper or mega data center, we're talking several hundred million, if not close to $1 billion. And that's like including the servers, the real estate, and operations, let's say, for a little while as well. It is that expensive, which is, I looked into it about a month and 2 months ago just to really understand the scale of these things for another client engagement we're working on. And it's massive. I mean, you're looking at 30% of a total budget being spent on switches, on like data center switches alone. So if you're building a $1 billion data center, you're spending $300 million on switches. Forget about the GPUs and the racks and interconnectivity and everything else. On top of that, I don't know if it was Anthropic or maybe Perplexity or one of those also raised a relatively large round. And what they said was that they're dedicating $500 million to $1 billion of that freshly raised round into their own fund so that they can invest out of that fund into other AI companies. So I would not be surprised if we're going to start seeing, maybe now, maybe it's just accumulating a war chest, to see a lot of capitulation throughout the industry, where there will be roll-ups. There is a ton of AI, a ton of layered AI types of companies and businesses out there. And there's no reason why a Perplexity or Anthropic or OpenAI or DeepSeek across the way, or any one of those platforms, wouldn't go out and try to like either acquihire or just acquire some of these other tools. Because again, it's digestion of data, specific digestion around specific data, where OpenAI is relatively general and they try to find niche applications. Some of the other AIs out there are mega focused on niche. And if I think about it from a practical perspective, AI tools will only gain value the more data that they're able to process, ingest, and digest. So if I am a large company with a war chest and I identify a smaller company that has a great access line to data, has the software built the right way to digest the data, I'd rather just buy it there and include it into my platform, similarly to how many other tech companies would have done it and continue to, rather than hire an analyst team, figure out a way to best digest data, figure out how to get that data, and then move forward in that way. It's just cheaper to buy somebody else at that point.
Yeah, we don't. I'm glad you mentioned Perplexity. Can't say the name. Perplexity. We don't mention them a lot here, but we should. It's actually one of my favorite companies, particularly because they move so quickly.
Yeah.
They don't. I mean, they when DeepSeek came out, they moved like at light speed to integrate it into their product, and they did it successfully. And it's just everything. They have these. They did an event with the Super Bowl. It was this
Yeah.
big contest.
Or that.
I mean, everything they're doing. I see a lot of other AI companies where they talk a lot about their models, but they don't do much marketing. They don't do. They're not great at FaceTime. They'll speak publicly, but they're not. They don't seem to have that normal Silicon Valley tech sauce that I'm used to. And Perplexity has it. Perplexity has that kind of extra whatever that element. So I'm really interested to keep watching them. Similarly, we have a couple of other. Well, the Wall Street Journal reported, and this is based on their sources. We don't, at least I don't have confirmation yet, but the Wall Street Journal reported that Ilya Sutskever, one of the co-founders of OpenAI, recently landed a $2 billion round for safe superintelligence, his new startup. I'm sure you followed the OpenAI tumult about a year ago, where Sam Altman was briefly fired. There was discussions as to whether or not Ilya was in favor of it or not. Then he was rehired, and there was this big kind of musical chairs. And then Ilya leaves. He, according to all reports, is kind of like the advocate for, basically doing what his new company is named, Safe Superintelligence. And there's some whispers that he's concerned that OpenAI is not as concerned as it should be. And then in rapid succession, the chief technology officer from OpenAI, Mira Murati, she also left, and she's founded her own startup called Thinking Machines. And my understanding is she's looking for something in the range of, I think, $9 billion in investment, and she's taking a lot of meetings. So two of the founders, there was a big Wired cover not that long ago, about a year and a half ago, that had the four kind of big, people from OpenAI on the cover. And two of those people, Mira and Ilya, are now starting their own companies. Have you taken a look at kind of what they're doing, the prospects, and kind of what it says maybe about OpenAI?
Look, OpenAI, as with most successful businesses, the joke is it's a 10-year overnight success. So it's, by the time we learned about OpenAI, it was already being built for quite some time. And those individuals have had their own interpersonal relationships for that long, if not longer, even before that, especially when you think about like Musk being involved in OpenAI all those years ago as well. So, on one hand, I know that oftentimes media likes to kind of create that type of environment and talk about like, oh, what are they doing? Are they fighting each other? Are they going to create competing products and all these different things? And I think it's simply one of those things where, I don't know how much you or the listeners cook. I don't cook that much myself, but I know that like chicken broth comes in a cube, right? At some point, someone out there was making chicken soup and said, you know what, I'm going to just dehydrate it into a cube so that whoever wants to make chicken broth pops one into water and then mix it around and you have chicken broth, right? And I think that's basically what the founders of OpenAI and a lot of the founders of these, let's call it direct innovation AI companies. So not like a layering or a Pix and Ag, just like a true OpenAI or Perplexity or Anthropic or something like that. I think what they have figured out how to do or what to do is that broth cube. And I think that was theirs. It wasn't like a piece of the company. It wasn't a piece of anything else. Or maybe it's just a process of creating the cube as opposed to creating the cube, right? It's one of those pieces where ultimately what ends up happening is that that's why they left. Like, I'm sitting there, maybe I don't agree with the direction of the company. I don't want to speculate what happened there. But if I am speculating on just generalities, I think that they've created a process of which to create, or the cube itself of like broth. And then each one of the founders just went off and created their own, concoction.
Do you think there's room enough for so many well-funded companies with what must be, to some degree, some of the same ideas you have now? Like, again, Mira, Murati, OpenAI, veteran, Ilya
Yep.
Sutskever. You now have X with Grok, Perplexity. There's a long list, and many of them are very well funded. Do you think this will help, or in some way? I've seen situations, particularly, when something's hot, whether it was Web 2, Web 3, Metaverse, sometimes a space is too well funded, and it almost kind of creates this stasis, and innovation begins to, wane.
Well, look, from one super speculative perspective, I start a company, I have 3 founders. I tell the other 2, here's the broth, go break off, raise as much money as possible. So at the end of the day, the 3 of us control the majority of investment going into AI, period. Right? Like, now the 3 of them, between all the funds they raised, probably raised $40 billion. 3 former co-founders of one another now splitting off on their own companies. Is there a big difference? Is there a plan to merge together? Like, again, I don't want to speculate, but that could be a possibility as well. But to answer your question, like, I don't know. I don't know how a company can deploy that much money fast enough for the investors to agree and say, yes, here, take a check. And maybe there's details that we don't know about. Maybe a $3 billion investment is paid out over the course of 3 years around deployment. But even with committing the capital and upfront paying for a data center and operations and stuff like that, like, $1 billion is a lot of money. You're raising 3 at a $60 billion valuation. That means that the most recent investor at that valuation needs that company to sell for like a $300 billion valuation. 180, let's say 3x their thing. Let's say 150, it's even less than that. Then you have to think, like, is this company worth $150 billion? And I'm not saying it's not. Like, I'm not trying to argue their valuation against one or another, but the biggest questions I have is, number one, how are they actually using this money? Just purely out of intellectual curiosity, how do you deploy that money that fast? And also just to be a fly on the wall in IC and investment committee meetings with all those venture funds of like, okay, we're investing at a 60 billion valuation. We're confident that this company is going to sell at a 300 billion valuation or go public at a 300 billion valuation.
For those, the uninitiated in terms of, investing and the stock market, there's that concept called alpha, which to my understanding is, kind of like beyond expected returns on a company's profit. And I've heard this discussion in the AI space that, people are beginning to question where the alpha is, if there is any alpha. So from your perspective, from an investing perspective, where is that? Particularly, I guess, going back to our earlier discussion of people, meaning people, like, you need consumers of some sort, whether you're, I guess if you're an enterprise company, maybe not. But at the end of the day, products need to be purchased in some way. And yeah, I'm just looking forward. How, is there alpha, and where does that come from if so many jobs are transitioned in a very vague way? We still don't really have like a very focused, clear view on kind of what new work looks like. I know it's a very broad question.
No, but I understood it. The way that I look at alpha for this being AI, for Web 3, for Web 2, for, AR, VR, it was hard to look at it the following way, but I'm a big fan of infrastructure. I think infrastructure can really give you a better understanding of what is going to happen in that industry. And what I mean by infrastructure, going back either quantum computing and the advent of the same, it's data centers getting built. All of that is fundamental infrastructure. Without a data center, we are stuck. We are at a plateau, essentially, of what we have today. And I'm saying that from a capacity perspective. When we were talking about before, like all this data needs to be ingested, and there's so much more that can be done, so many things that we can learn about identifying and improving processes and efficiencies. And I mean, we have sensors in our cars. We're driving around all day. There's no reason that like the DOT doesn't get a report saying, hey, there's a pothole on 33rd and 4th in New York that 72 cars are hitting on an hourly basis. Let's prioritize the fix of that. Like, there's no reason. Today's technology allows that. So it's a matter of implementation and adoption. And as it's implemented and adopted, volume of data continues to grow. Necessity for these data processing centers, whatever you want to call them, that also grows, wherever location that may be. So data centers, quantum computing, shrinking down computational sizes, free space optical so you don't have to run wires. All of those are like, we have clients in those spaces, and that's why I'm relatively well versed in what that looks like specifically. But it's always been that for me, even in blockchain. Like, invested, and maybe I missed the boat a little bit, maybe not, invest in cryptocurrency versus, invest in the underlining like credit card processing software that will allow people to pay with Bitcoin. Now, all of a sudden, Bitcoin's pricing, yes, volume of transactions will depend on Bitcoin's price, but transactions are likely to increase over time, regardless of Bitcoin, because if it's Bitcoin, Ethereum, Doge, Solana, and Shibu, any one of those coins, like, probably, in my opinion, crypto will exist in some way, shape, or form at this point indefinitely. We've always had digital money. Now it just takes a little bit of a different form. So people are going to want to pay. You need a payment processing. You need a bank. You need a wallet. You need the things that are needed in order to allow for this technology to be ubiquitous. And that's what I mean by infrastructure.
Jeffrey, I appreciate your time. Why don't you kind of give us like a URL or just social, like where can people find you and kind of follow your sage wisdom and kind of your insights?
Yeah, so I guess my insights, I keep it relatively simple on LinkedIn. So Jeffrey Fidelman, that's my name. You follow me on LinkedIn or check me out there. Our website is fidelmanco.com. You can get all of our contact information and information about what we do for our clients on there. If a company is looking, or fund managers looking to raise capital or get their materials in order, that's really where we're going to drive the most value. But I've seen at this point hundreds of companies set up, get started, and go after capital. And if it's nothing more than a call and, hey, Jeff, here, I want to throw an idea off of you, and this is what we're looking to build. Can you help? I'm always happy to have those calls as well.
Awesome. And you can check out previous episodes of the 100 Year Podcast at 100year.com. We also just did this new thing. We started releasing our video episodes on Spotify. I know a lot of people use Spotify for audio, but they also have a video function. And we were encouraged by a friend to make that available. So now you can also watch us on Spotify. But our main vehicle is YouTube. Please like and subscribe. We would really appreciate it. And for some of our insights via text, you can check out 100year.substack.com, which is the 100-Year Lens newsletter. Again, Jeffrey, thank you for joining us. I really appreciate it. And we will see you guys next time.